We're now going to have a look at the institutionalization of the digital asset industry. So how do we go about doing that? There's a man here who's going to let you know. He is the group chairman and the CEO of NexChange, and also the CEO of Arrakis Ventures, the family office in USA. So please, many of you have met him over the last few days. We're really looking forward to hearing him now. So give a very warm welcome, a rousing welcome to Juwan Lee.
Thank you, everyone. It's so great to be here. I would like to thank Martin Dow and Nutshell for inviting me. One of the things I want to share with you today is that it wasn't actually that easy to get here. I had one of those flights that was actually canceled. My flight was out of Thailand, so it took me about 24 hours to get here, but I can tell you that my experience so far has been amazing. Listening to the Prime Minister talk about what he plans for the whole country, the future, taking risks, this was very inspirational, even from a person like me, who is located in Hong Kong and is really in the center of all capital markets. Today, I would like to talk to you about that we are in the midst of an evolution of the institutionalization of the digital asset fund industry. What does this mean? I'm referring to crypto funds. Let me tell you a little bit about where I'm from first. NexChange Group is a venture innovation and media platform. We focus on blockchain, fintech, AI, health tech, and smart cities. We either market, invest, create, or provide access to products. And we do this with 4 divisions. We have a media company. We have an innovation lab. We have a venture arm. And we have a fully licensed digital investment bank. Now, some of you might know last week, we had 4,000 people in Hong Kong for Hong Kong Blockchain Week. So it was really an inspiration to not actually be involved in the organization of this event. So I'm very happy to be here. A little bit about my background. I spent 30 years as an investor. I was in the Silicon Valley. I funded companies like Netscape, Yahoo, and companies like Tomb Raiders, like these companies that really revolutionized some of the things that we do today. I've been involved in all aspects of investments, from hedge funds, venture capital, prop trading, asset management. And it's very interesting that we are now evolving into a new asset class, which is investing in digital assets. And we're very active in digital asset investment through our family office. So why are institutions even interested in investing in digital assets? Why is this important? Well, first of all, it is a burgeoning asset class. If you see what happened, the market capitalization in 2017 was $17.7 billion. It went up dramatically in 2018 to $800 billion, and now down to about 130. So it has gone through a revolution in terms of just prices. It is an asset class that is largely uncorrelated. You'll rarely find an asset class like this. Almost every asset class correlates in a market decline, but generally, digital assets don't correlate. It is definitely a value creation that's taking place. It's not just about cryptocurrency. Blockchain is now, we're starting to see real use cases, especially in certain industries like financial services, health. These are just some of the examples. We should start to see real execution of projects like this. And also, we are starting to see that it is capital that's coming into this market. Not right now, but we're starting to see institutions start to look at this. But I think what's one of the important aspects of this asset class is that in typical venture capital investing, it's a long cycle. With the advent of ICOs, although not so popular anymore, it has developed into SCOs, which I believe is the future of what we're going to see. But what's important is that it allows for a much quicker liquidity exit. And that is very important as we go forward into the future. And also, what we saw in the traditional asset classes with all the different things that took place, the alpha really was very hard to get. So if you have informational advantage, there is definitely alpha to be had. Let me give you some sense of how big this is. If you look at traditional market capitalization of the capital markets, it's about over $500 trillion. If you look at crypto, it's 130 billion. It's very small. So if you look at as a percentage, it's about 0.03%. So it's tiny. If it grows 40 times, it will still only be 1%. But what's even more compelling than this is that look at the assets under management. As a percentage of market cap, it's only 3.8 versus 17%. So what we have is the opportunity, if we don't even grow the asset class, but if we increase the penetration, you still can get growth in this asset class. Also, if you see the funds, there's about 450 funds around the world. About 160 were created last year. So it is an industry, although we've seen a decline in the market capitalization, we have seen more participation of new funds that are being created. These are some of the names, some popular names. Andreessen Horowitz, Block Tower. In China, there's a company called Fembushi. And there are a number of new funds that are being created. Hope to see one created here from Pakistan. So if you look at the landscape, it's important that right now, largely, it's in the United States. Hong Kong, China is a far second. We have UK, we have Singapore. So these are pretty much where most of the funds are being managed and located. And what we look at is the types of funds. There's generally two types of funds. There are the ones that are venture capital, much more equity-based. And then there's ones that are hedge fund-oriented. We're starting to see little bits of where, as we start to see the asset class grow, we'll start to see private equity a little bit more involved. Also, what you need to understand when we talk about the institutionalization of this industry, the makeup of how big these funds are. Majority of the funds, 80% is less than $50 million. And majority are even less than 10 million. So when we saw a lot of the decline in the market, the impact on this to these small funds was dramatic. And if we look at what's happening, what I would like to share is there's a lot of corollaries between digital assets and also what we have happened in the hedge fund industry. What we saw was that in 1992, we have seen the first time where hedge funds came into the public consciousness when Soros tried to break the Bank of England. And before then, really, hedge funds weren't really popular. And since then, the hedge fund industry has evolved from early to institutional to a consolidation and maturity. We are still in the very early stages within the digital asset industry, way back, if you see this, the red arrow. So there's a lot of still maturity left, but one of the things I will tell you is happening is that everything's happening faster. There's already a roadmap so that things don't have to be established for the first time. There's this roadmap that the hedge fund industry already established, so we should see everything happen, but at much quicker speeds. So if you look at who are investing in these digital asset funds, they fall into a number of categories. There could be other fund of funds, it could be family offices, it could be other hedge funds, venture funds. And what we see a lot of it is that people want exposure. They don't understand how to invest in this asset class. And the first stages of it is really getting through into the funds. But there is a conundrum. This is not an industry that doesn't have its problems. If you look at it, it's really not many professionally managed funds. Risk management has been very haphazard. There's a lot of volatility. We don't have supporting systems in place, back-end operations, and custody. So if you want to look at it further, you really have to understand the market structure of what are these digital funds actually even investing in. Vast majority of crypto is in 4 different coins. So already there's not a lot of diversity. And if you look at the digital funds today, vast majority, there's less than 5 people. So how can you become, how does an industry become more institutionalized when you have so few people, when you actually need to be focused on investment, but there's very few people actually involved in the money management? So if you look at it from a professionally managed perspective, a lot of the managers that evolved basically bought a bit of Bitcoin, and then all of a sudden it appreciated dramatically, and they call themselves a money manager. That is far from being a money manager. There's very few inexperienced managers in the space. It's also, we've discovered that it's very difficult to scale strategies when the market structure looks like what it does. You really can't short besides Bitcoin and having liquidity. And if you look at the performance of many of the digital funds, they didn't have stop losses. And they cavalierly managed the risk management of this. Also, this is an asset class that has tremendous volatility. And until that volatility somewhat subsides, it's going to be very hard for institutions to be involved. And this comes from improvement in OTC trading, having much more liquidity on the exchanges, but the very fact that the prices of crypto has come down has reduced the liquidity. But what we're starting to see in the market is creative products around stable coins that allow for a much more stable investment. So this is one of the things that we're starting to see in 2019. If this kind of predominant theme takes place, we will start to see a little bit more institutions getting involved. But it's still, we haven't even solved the problem that if you want to even buy cryptocurrency and you want to convert cash to crypto, that's not even that easy to do today. In terms of valuation, we will have a difficult time for pension funds to be involved in crypto if we don't have a proper valuation technique. Right now, if you look at some of the ICOs that were created in 2018, 2017, it wasn't really based on any proper valuation. As we start to move more into the STO market, we will start to see much more focus on ROI, where we have real, true valuation techniques. And until we have this, we don't really see a large number of institutions getting involved. Also, supporting systems. If you look at and talk to many of the managers today, they're managing basically out of a spreadsheet. And you have less than 5 people involved in most digital funds. So we need to have proper supporting systems in place. We don't even have, in many cases with the digital funds, a risk management or a proper risk management. We need to have value at risk to understand the risk of the portfolio. These are the things that a true professional manager would have. And of course, everybody talks about the custody. We have had significant problems with security. It's very much like a bearer bond. Whoever owns the bond actually have access. So this is very important. Pension funds will not get involved until there is a much more secure custody in place. We start to see large institutions start to tackle this. And in 2019, I believe that we will have credible solutions. But it's very hard, I will tell you, to have institutions like pension funds involved if you have a treasure wallet like that as where you keep the money. So it's a perception, but also a real issue that needs to be solved. So let me just kind of summarize what is taking place in this digital fund industry that's important. Is that it is an attractive place to be. There's a lot of inefficiencies. If any of you have ever managed traditional assets, there's very little alpha that you can gain. There's tremendous efficiency with information. Digital funds are underpenetrated. We should start to see a lot more institutions start to invest once the conundrums are solved. We'll start to see a lot of similarities with the hedge fund industry. So be prepared for that in terms of the actual growth that took place. And also, although the funds are small and there's been some issues with many of them probably going under, I am very optimistic because we have cleaned out many of the bad players. I see the future as very promising. And hopefully, when I come back next year to this same leadership workshop or event, I would love to see many more digital funds here in Pakistan. Thank you so much.
Stay with me, stay with me, stay with me. No, don't go anywhere. We're really grateful for your contribution, and I'd like to invite Asfar Assam back to the stage, Ali Akai, and also we'd really be honoured if Margaret Adamson would join us, the High Commissioner for Australia, to present Juwan Lee with this token of appreciation. And thank you so much. It's a complicated issue. I think at times we, particularly smaller business too, we might scratch our head and look at what we need to do there. As far as here, Margaret, thank you so much. And maybe I'll keep you on the stage, then you won't have to run up and down, because I'm really excited you're on the next panel as well, so whatever suits you. So again, thank you so much, Juwan, for putting that in perspective to us. And we are going to hear from him later on another panel, so I'm very excited that he's here with us.